inflation is theft. Inflation is theft. If you go back and study history throughout the whole 1800s, with the exception of the Civil War, we actually had steady deflation. And steady deflation is something that should be targeted in a real money system. But because we live in a fake money system, we have to constantly make new money.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for July 24th through July 31st, 2023, while supplies last. And on this one, supplies may not last long, because this week we feature 2023 American Silver Eagles at just $8.99 over spot, our lowest price on Silver Eagles in more than a year. Since its first release almost 40 years ago, the Silver Eagle has been, without exception, the world's most popular bullion coin, which provides unparalleled recognizability and liquidity. It's 3/9 fine, comes 22 a tube, 500 to a box, and is available at just $8.99 over spot while supplies last. Finally, the Silver Eagle is IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're glad to have this first-time guest join us today who's an insider and has walked out leaving the investment and banking industry because of what he got exposed to there that convinced him it was not serving the best needs of the customers. That's ordinary people like you and me that are looking forward to trying to save up towards our retirement. Daniel Tinkham, an MBA and CRPC, left the securities business after a 17-long-year career between banking, insurance, IRA rollovers and comprehensive planning, and 401ks, and actually gave up his Series 7 license because of what it wasn't allowing him to do to really help and fit the best needs of the people he worked with. Daniel, thanks for coming down Liberty and Finance for the first time.
Donegan, thanks so much for having me on. It's a pleasure.
Your story intrigued me. We have had insiders and whistleblowers from various walks of life, and this one particularly spoke to me because you talked about two main things I wanted to focus on. One was what you became exposed to kind of inside the belly of the beast or inside the current investing industry, banking and investing industry, securities industry, that made you convinced that it was not allowing you to serve the best needs of ordinary people. And then the second is what you perceive to be a misconceived starting point, an assumption, perhaps normalcy bias after these last several decades of low interest rates and the bubble of everything, one might call it, with the stock market and bond market and real estate market, everything going up. Buy on dips is all you need to do and hold on tight. You'll get your 7 to 10% a year. And that when we are looking at preparedness, the situational awareness that we have and the accuracy of the data we're starting from determines if we're asking the right question, will we get the right answer? And if we're making the wrong assumptions, the results could be catastrophic for people. And you're concerned that a lot of people are making the wrong assumptions and that the professional advice that they're getting is not helping them to stay aware so that they make better decisions. So if you could first start out by giving us an understanding of what it was that you experienced and were exposed to in your career related to banking, insurance, and investing that convinced you it was not permitting you to meet the best needs of the people that you were serving.
Yeah, absolutely, Donegan. So, when I started, between banking, insurance, and retirement planning, there's little things over the years that started to build up for me. And then really the straw that broke the camel's back for me was, learning more about the Series 7 license that I held for so many years. And, it's the inability to really talk outside of traditional norms of what your broker-dealer, wants you to talk about. So every broker-dealer is, they have scripts and things behind the scenes where you can say this, you can't say that. There's and for me, it was really the regulatory and the compliance aspect of it, just got so burdensome that I said, it just makes sense to not have my Series 7 anymore. I know, what I was doing for my clients was I always did the right thing for my clients. And looking back, to me, it just made a lot of sense to, get rid of my Series 7. And now I'm in private equity where I can help my clients. I can help with consulting, advising, and just really able to help my clients a lot more than I was able to previously.
In the role that you had on the investor side of the table, where you were providing guidance, providing consulting, that sort of thing, with people trying to plan their financial futures, most of our viewers are on the customer side of that table. They're trying to plan their financial futures. They're looking at our world and saying, a lot of things don't look right. A lot of things aren't going right. And they want to position themselves to be better prepared for what's coming. And most people assume that the professional investment advisor that they're working with is aware of the situation that we're in and is going to give them advice that's appropriate to that. Were there particular snags you ran into? You mentioned things you're allowed to say, things you're not allowed to say. Are there particular things that maybe you can help people understand what their investment advisor might not be able to tell them, or may not even be aware of because of the training and the preparation, product knowledge, et cetera?
Yeah. So one of the other main reasons I left is because I truly believe from the bottom of my heart that we're about to enter a 10-year or more commodity super cycle. And it's really frowned upon to really talk about anything other than stocks and bonds in many circles. Some advisors will introduce alternative assets, but for me, I'm a big hard asset person. So starting your financial foundation with gold, silver, and enough ample cash to cover you. Those conversations should also include, what are you doing to prepare? Do you have food? Do you have medicines? What's your water situation look like? And most financial advisors are simply not having that hard asset conversation. And until people like your viewers start questioning their Series 7 financial advisors, that's probably one of the first things you want to ask is, are you Series 7 licensed? And if they are, just be prepared that you're probably going to get some pushback. Some of you it might seem like you're talking to a wall because they're just not going to comprehend what you're saying. So in some sense, a lot of the customers might actually be introducing new concepts to these financial advisors, to these investment advisors for the first time, because, they're drinking the Kool-Aid all day. I drank the Kool-Aid for many years as well. And it's, one of those things that hard assets are either frowned upon or it might make up less than 5% of one's portfolio. But as we start to see other trends like ESG unravel, that's something that it was just getting pushed to the nth degree. And, for me, I couldn't sit there and, even really talk about ESG in a positive manner. And so that's ESG. That's a rabbit hole in and of itself.
Right. Now, you mentioned sometimes it'll be the clients bringing up to their investment advisor that they want to get into more hard assets, that sort of thing, and not be all in, not all have all of their retirement chips into the system with stocks, bonds, and real estate. You mentioned to me when we were getting to know each other before the interview about sort of this idea of the everything bubble that we've come through. And I want to talk with you a little bit more about what you see in the macro picture going forward. But still within that discussion about the system and the advice that people are getting, I've had multiple financial advisors who have approached me and said, I wish I could send my clients to you, but my employer, the company I work for, the system I work within, will not permit us to sell outside of this product set that we're supposed to be recommending out of. I've also had a few who have said, I am going to refer my clients to you because I believe it's the only right thing to do. And I'm known, some of them say they're known in the office as the gold guy. And for years, one of them said that people were just kind of ignoring what he said. He was a kook or something. But now they're coming around the water cooler and saying, what were you talking to us about gold or silver recently? So there's reason to think that there are several, you're not alone there, within the system who wish that they had the freedom of speech to really conscientiously offer to their clients what they think is going to be in their best interest and not just what's on the sales sheet that they're supposed to push. Can you talk to us about, are there any specific processes, procedures, or repercussions, that sort of thing that are imposed on planners when they're limiting their options of what they can tell to their clients, what they can show their clients or provide their clients as options?
It's really as simple as, if someone brings it up on the inside, we don't offer it. You can have a general conversation about it, but that's about it. We don't provide referrals. It's really up to the client to search on their own, and the firms are not really interested in finding any matchmakers because they don't want to lose, their own business, even if it's a small percentage. From that standpoint. So a lot of some of it is taboo too. It's still, even within the financial industry circles. I've tried to have conversations about gold and silver with colleagues in the past, and it goes from being a very hard conversation to they're not even interested because they think gold and silver are barbaric relics. And many financial advisors think that, and they don't understand the difference between fiat and money. They don't understand what Nixon did in 1971. They don't know what Bretton Woods is. So, I mean, it's one of those things for me. It's all about education. It's about understanding history, not just, look at the 401k. When was the 401k introduced? 1978. That really coincides when a lot of money started entering the 401k and IRA space, which it was actually a loophole. It was actually not something that was really ever intended, but an auditor or an actuary, found a loophole in the law that kind of morphed into this 401k. And between 401ks and IRAs now, I think there's something to the tune of 15 trillion worth of assets. The old saying, your IRA is an IOU to the IRS. And if you have money in a 401k and an IRA and a pension, that money is eventually going to be owed to the IRS. And if they decide to raise taxes, which, we're 32 trillion in debt and rising exponentially now because of interest rates, where's the government going to look? They don't want to cut Social Security. They don't want to cut Medicare. They're going to have interest expenses. IRAs and retirement plans in general are really ripe for the picking. From that standpoint. But, I truly believe we're going to be going into another, we have these different cycles, and some of your guests in the past have come up with different cycle theories, and I am totally a believer of the cycle theory. We've gone through this 50-year cycle with fiat. We've been through this 40-year cycle from 1980 to 2020. You can go back, 75 years, and there's also multiple. There's the 240-year cycle. And so history when you look at history through those lenses, it gives you a whole newfound perspective. A lot of people don't realize that our nation actually did have a hyperinflationary event. The old saying, it ain't worth a continental, which happens right after, that was right after 1776 through 1781 is when the continental currency hyperinflated. So it can happen. It's happened before. It can happen again. And I think we have a lot of biases where people think, oh, this happened in the past, so we're going to use probability assumption to just assume that that's likely to happen. And that's in a lot of these quant models is we were talking about this before. It's garbage in, garbage out, good information in, good information out. So a lot of these biases is really just a misunderstanding of the past. But when you can understand the past in a different level, you'll understand that moving forward, those that are going to survive, much like George Washington and Thomas Jefferson did, they were one of the few founding fathers who were able to maintain their estates and they didn't lose it. Farmland, so any real estate, gold, silver, livestock, food, your typical necessities to live, and those investors are going to fare far better, holding on to physical hard assets than those investors in stocks, bonds. I believe that we're going into a 1966 to 1982 event where over the next 10 to 15 years, it's going to be value over growth. So if you are going to stay invested, stick to value, stick to dividend players. Most people don't realize that 60 to 70% of your returns over a 30, 40-year period are going to be dividends. And so, if you are going to stay invested, some of those investing principles do still hold true, but you should look at and assess your overall portfolio and say, where should I start first? And that's gold, silver, cash, land. I mean, I have a homestead here in New Hampshire. We have some chickens. We just got a couple dogs. We have a really good water source. we have food stored. So for us, it's really about preparation, and and your channel really, you and Elijah and Kaiser have really taught me a lot over the years about what it means to prepare. So, and I know all your followers appreciate it as well.
Something I want to read directly from a letter that you wrote to me, a little excerpt from it, because I think it gives the heart of what drove you to say, "Hey, I've got to do something about this. First with my own life, and then I gotta get this message out." Because that's actually what got Elijah and then myself into forming web platforms, was this compelling feeling that for the good of our fellow men and women, we've got to get this message out, because people are absolutely not being told this. In fact, it's being hidden and made confusing. There's something you said is so goes right to the heart. You said, "I took a stand and left the industry I once loved, refusing to participate in a system that keeps everyone in the dark, confused, and in fear. If everyone wants to pull their money out of stocks and money markets at once, it would not be possible. The system relies on trust alone. The entire financial system confuses collectively and subconsciously through jargon and hard to understand concepts, so people do not know where to park their wealth, as one only has to look at how the advisor is compensated to determine their own self-interest. The next transition will be about preserving what you have accumulated, as opposed to growing your balance in dollar terms, which has become the norm since 1980. We will be headed into a 1966 through 1982 style world, and this thought process of the last 40 years will reverse in spectacular fashion." Several major points there. One is about taking a stand and voting with your feet, refusing to participate in a system that keeps everyone in the dark. And I guess that introduces that topic, that the system itself is so impossibly complex that nobody really can understand it. I mean, I've had experts on here who've been in the derivatives complex business for almost 40-year careers, and they say nobody can accurately estimate the actual size of the derivative complex, because it's so interconnected and multiplied and dependent and everything, and when something is so complicated and so obscured that it's not possible to understand it, it's just the same as saying that you're powerless and you can't make intelligent, informed decisions. How can you be informed if something is incomprehensible? Then you go on to talk about conflict of interest on the part of advisors. Sometimes it's not even their fault. It's the system is set up that way. Their employers train them that way. They're just doing what they do to keep a job, but it's not right. And you said, "I can't do this anymore." And then the last point is that key point about saying, if people are assuming that their future welfare for the next 10, 20, whatever years depends on things being the same as they were for the last 40 years, they're in for a very rude awakening, because we're likely to have a big reverse in a spectacular fashion. Can you talk about what things you're expecting in terms of this reverse that people should be expecting, rather than these glory days of the last 40 years where everything went up and you buy on the dips?
Yeah, so each person needs to look at themselves as an investor, and you have to be your own financial advisor. I've taught people for a lot of years. I've consulted, I've advised, and some people take all my advice, some people take some of it, some people take none of it. But at the end of the day, whoever you're going to listen to, you have to listen to many people, and then you have to form your own opinions, because you're going to watch dozens or hundreds of different YouTube channels. Everybody's going to have their say on, this hot, crypto and this hot stock and this and that, and everybody's going to give you their opinion. So it's important to listen to a lot of people, but ultimately you are the best steward for your own wealth, period, end of discussion. So again, it goes back to those basic principles of, how to grow and build your wealth. And moving forward, it's not going to be how many dollars you have in the bank and how much you have in your brokerage account. It's going to be, what land do you own? Because everything eventually is going to be valued in gold and or silver. It's most people, you go to the grocery store, oh, that's $1 for, a piece of candy. And eventually I expect that to be, oh, that'll be, so much in gold or silver terms. It'll be much like trying to switch Americans from to the metric system. It's something that still hasn't happened, but I eventually think that they'll, over the next 10, 20 years, there should hopefully be a switch in a sense where investors can start thinking about it in different terms. Because I know you and I can think about things in terms of, what does it cost in, gold and silver terms, but for the average person, that's going to be really hard to comprehend.
It's only hard because we've fallen out of practice of it, and it's actually much easier to transact in something that's stable and tends to be consistent over time rather than a shrinking unit of currency. It's the thing that I find the most clearly demonstrates that is when people call up to buy what they call junk silver or 90% silver constitutional coinage, dimes, quarters, half dollars, made prior to 1965 were all 90% silver. And it is befuddling to many people why they have to pay $220 to get $100 worth of dimes or that sort of thing. $10 worth of dimes. So, that kind of, the fact that a buck ain't what it used to be is really is confusing. And the system, the bizarre system of inflation and the assumptions, even the Fed saying that they have a 2% inflation target.
Inflation is theft. Inflation is theft. Inflation is theft. If you go back and study history throughout the whole 1800s, with the exception of the Civil War, we actually had steady deflation. And steady deflation is something that should be targeted in a real money system. But because we live in a fake money system, we have to constantly make new money, which is why they have, a 2% inflation target, which we know is not 2%. It's, all you have to do is look at shadow stats and you can understand that inflation's been a lot higher. But they need that new money to enter the system, and it enters the system through, the richest people, and then it trickles its way through with whatever they're spending or wherever they're investing. Money is always free flowing. It's going back and forth like waves. And, so from that standpoint, when we do return to real money, which will, Andy Schectman has obviously, spoke volumes about BRICS, and that's happening next month. And if you ask any financial advisor, say, oh, do you know what's going on next month with BRICS? A lot of them won't really have a good understanding as to what's going on. It's really the first true competitor to the dollar, probably ever for at least for 100 years when we took over the pound, as the dollar became the global reserve currency. Some countries have tried to do it on their own to little success. Saddam Hussein tried. We know what happened to him. Muammar Gaddafi tried it. Look what happened to him. But now there's 27 countries and counting that are going to be joining. I wouldn't be surprised to hear France. France has always been at the forefront of these kinds of movements. So a wild card event that I would expect either later this year or next year is for France to announce that they're joining BRICS. And I don't know if they'll stay with BRICS and Euro or if they'll just do a hard cutoff. But, I'd say in particular. So there's going to be a lot of crazy things happening in the near future, as they have in the past. But I think things are going to get a lot weirder moving forward.
Well, Daniel, we're grateful for your presence here with us as someone who's walking the walk and not just talking about it, but actually doing something. You voted with your feet and left the modern financial banking /insurance investment industry to try to help people more directly in a way that's more realistic for what's really happening. If people want to follow your work, where should they go?
Absolutely. Well, first of all, I also want to say that Jesus Christ is my Lord and Savior. Without him, I would not be here today. So, born and saved January 2019. So grateful for that. If anyone wants to connect with me, danieltinkham.com. So that's DANIELTINKHAM.com. There's a contact section. I work in private equity within oil and gas investing. I only work with accredited investors. So your net worth has to be $1 million or more, excluding your primary residence. And then for gold and silver, Kaiser Johnson is my gold and silver broker, so I recommend them for through Miles Franklin. And but if you have any questions on oil and gas, or if you have any questions in general, DanielTinkham.com.
Daniel, thanks for joining us on Liberty and Finance.
Thanks, Donegan. It was a pleasure.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.